Hello, and welcome to another episode of Chamber's Expert Focus. We are joined today by Fatima Hunaid to discuss two critical components of India's tax dispute resolution landscape, its Advanced Pricing Arrangement Programme and the recently introduced Vivad se Vishwas Scheme 2024. Fatima is a chartered accountant and the transfer pricing practice leader at Grant Thornton Bharat LLP. As such, she's perfectly placed to reflect on these measures, which clearly indicate the government's intention to create a more stable tax framework for businesses in India. These initiatives are shaping the way businesses engage with tax authorities, and we're here to unpack what they mean for you. Welcome, Fatima.
Thank you. It's a pleasure to be here.
Thank you. To begin with, please share your insights on the current tax litigation landscape in India. How do you see the landscape evolving in the near future?
Absolutely. Now, it gives me no particular pride to share that India is right up there in terms of the most litigious countries in the world. And one of the significant areas contributing to that is the transfer pricing litigation. And just to share some statistics, as per the government reports, direct tax or income tax cases are in the range of 300,000 pending in appeal. And on the GST side, also there are piling amount of number of disputes. And with the GST tribunal not yet up, it's only expected to mount even more given its nascent stage. Now, India's growth path is known, and we are aiming to reach the third highest economy in the world by 2030. And given that it's on the back of a lot of increased globalized trade, India is up there on the roadmap of any company that seeks to grow and scale worldwide, whether it's in terms of manufacturing, market economy, or global capability centers. India is a part of every company's plan as they think about going global and growing in scale. So the government also, therefore, is on their toes to ensure that they are helping India rise in terms of ease of doing business and taking proactive measures such as advanced pricing agreement or introducing on a timely basis the Vivad se Vishwas fast track settlement scheme is very much a part of India's economic strategy to help ease of doing business.
Interesting. And as a transfer pricing expert, do you have any thoughts on transfer pricing specific litigation and dispute resolution in India?
For sure. Let me begin by giving you a context of how transfer pricing litigation has matured in India over the years. Over the last 2 decades, we've seen a significant shift in terms of the focus areas of the transfer pricing authorities in India, starting from disputes around cost base or markup percentages. It's now evolving into more granular areas such as novation of client contracts, valuation of human capital. What is the role of Indian employees in the development or creation of intangibles? These type of issues were litigated in the past, but they were few and far in between. But this is becoming more of a norm with information being sought in initial notices that are issued by the transfer pricing authorities themselves. So that's something which is becoming more of a regular activity which is being undertaken. The authorities going up the curve.
Okay. And given that backdrop, two initiatives stand out for their role in resolving tax disputes quickly and providing certainty to taxpayers, the Advanced Pricing Arrangement Programme and the Vivad se Vishwas scheme. What are your thoughts on those programs?
Sure. So essentially, the Advanced Pricing Agreement Program of the Transfer Pricing Department is aimed at helping companies get certainty on their transfer pricing for their international transactions with their global group companies. And that essentially offers an opportunity to cover 9 straight years, 5 prospective years, and 4 past years. And that's a scheme which can be availed by companies at any time. However, the Vivad se Vishwas scheme translating into from dispute to trust, is aimed at letting the steam of accumulated litigation. So whenever the litigation mounts and is clogging up the courts and also, creating a burden for companies, the government introduces the scheme. The last time it was introduced in 2020, and very recently, effective from 1st of October, it has been introduced in 2024. So this is a limited time scheme that helps companies to quickly resolve and make their balance sheets lighter from the litigation, whereas the advanced pricing scheme is aimed at getting certainty on transfer pricing for a 9-year time period and therefore avoid uh, transfer pricing litigation in itself.
Got it. Let's start with the advanced pricing scheme. Could you give us an insight into India's advanced pricing arrangement program? How do taxpayers in India view it?
Absolutely. Now, there are a few categories of international transactions which have been hotly debated over the years. Specifically, I'd like to mention the technology, the back office, the shared services. All of these kind of transactions have faced intense scrutiny and high level of adjustments over the past many years. And there are global companies that have actually taken the benefit of the advanced pricing agreement program in India. To share with you some statistics, there's been a rise of almost 31% in terms of advanced pricing agreements concluded. A majority of the APAs concluded are in the services sector, and about 70% of them are unilateral, and about 78% of agreements, bilateral agreements signed, are again from the services sector. So this has been the kind of offtake by companies. And typically, the method that's predominantly used in the advanced pricing agreements that are concluded is the transactional net margin method. There are many agreements where the comparable uncontrolled price method is also used. And also giving you a flavor of the countries, the transacting countries with which Indian companies have had transactions, or in the reverse scenario, MNCs are having transactions with India. Almost about 130 transacting countries are named in the APA department's annual report. And when we talk about the bilateral APA, almost 15 transacting countries, topmost being US, followed by UK, Japan, Finland, and South Korea. So overall, the agreement process has been, although even though it's been long in some cases, overall there's a positive offtake by businesses, with a record number of APAs being signed in 2023. Almost 96 APAs were signed, and almost one third of them were bilateral agreements as well. So a number of proactive APAs being concluded.
Got it. And given that we're considering bilateral agreements, other countries getting involved in these, how would you compare the maturity of India's advanced pricing arrangement program with those of other developed countries like the United States?
Absolutely. So I would like to address it in two ways. One is in terms of volumes. As you can imagine, India is very quickly catching up with the US in terms of volumes. As far as the maturity of the issues are concerned, India, like I mentioned earlier, is moving up the value chain in terms of the kind of issues it's focusing on and the type of transactions it's focusing on. Having said that, US happens to be a headquarter jurisdiction, which historically has focused on high value transactions, intangibles, etc. And therefore, I'd say it would be some time before India reaches there, simply because a lot of disputes in India have been around captive centers, imports, exports, and the like. So, in terms of volume, very close. In terms of maturity and the technicality of issues and the methods employed, I think we have some way to go.
So some way to go there, but how do you see the advanced pricing arrangement program developing in the near future?
Absolutely. I think it's only going to grow in importance over the years as India continues on its economic growth trajectory. And it's becoming a key destination, as I mentioned earlier, for most multinational companies. There are headlines, every other day where companies are talking about setting up or increasing their footprint in India, and most global companies are increasing their presence. And there are newer companies who definitely want to access the Indian market. And with global access to India comes increasing number of intra-group transactions with India, and therefore the transfer pricing disputes. So this is only going to grow in importance because no business likes to invest time and effort in protracted litigation. And if we are talking about litigation in India, it takes invariably 8 to 9 years to achieve some sort of finality if the company has undergone a transfer pricing audit or a tax adjustment. So, absolutely, this program will have even more takers as we go ahead.
Right, 8 to 9 years shows the value of advanced pricing arrangements. Given some of those trends that you've outlined, could you share your thoughts as to how taxpayers should navigate the program?
Absolutely. So the advanced pricing agreement needs a dedicated effort in terms of firstly shortlisting which of the cases need to go through the advanced pricing program. And when I say that, what I mean by that is that, look, if there are a number of categories of transactions, one needs to assess whether all of the transactions need to be included, or you kind of shortlist and say you don't want to include a few in the APA program. But that again needs to be done with a lot of consciousness, because if you don't include certain transactions in the APA, then the company is exposed for a regular transfer pricing audit and the regular litigation route. So one is the choice on which transactions to include and whether to exclude, putting it the other way around. The other is an intense cost benefit analysis, because the APA program also has its allied costs, and it typically takes a couple of years to complete the negotiation process with the tax department. And I'm giving this period assuming it's an efficient process and one is able to move forward quickly. Then the choice to be made is whether the company should go for a unilateral APA or a bilateral APA. The bilateral APA obviously has the benefit of the concluded method being accepted in both the countries. Say India is transacting with US, a bilateral would ensure that the transfer pricing method concluded is concluded between the competent authorities of both the countries, and therefore it's absolutely final and will not be litigated on either side. The other aspect to be absolutely validated is the functional profile of the companies involved in the transactions if it's not been done earlier. The next is as you approach the filing, there's also the option of approaching the APA authorities for a pre filing consultation. I would recommend that if the nature of transactions are unique, or there are certain other unique factors or specific expectations other than the markup, because such type of inputs are usually not given, and understandably so, because the authorities also need to validate the actual functional profile. But there are useful inputs to be had provided the case is unique. After the filing, one needs to move the process forward expeditiously. So there will be a few questionnaires, there will be an on-site visit. If the company can be proactive and respond efficiently, the process can move forward faster. And of course, I think the most important thing as one embarks on the APA journey is to be realistic in terms of the outcomes the company is expecting. And there, that will make sure that the amount of time that is invested actually reaches fruition when the position paper is discussed, and little bit of flexibility will be in order while discussing the final terms with the APA department. Typically, they are extremely cordial and corporate like, in negotiating the APA process, and that's usually quite helpful.
Thank you. Now, switching gears to another significant initiative, the Vivad se Vishwas scheme. How do you evaluate its success so far?
Absolutely. So, if I take the cue from the 2020 scheme, it was a resounding success. And again, to share a few statistics with you, there were about 11 million cases that were settled, and about 8.7 billion USD that was settled under the scheme across different cases. And I think that's an effective outcome that was aimed at in the scheme last time. And I think the current scheme is widely expected to outdo the previous scheme if we go by the some of the reactions to the scheme that are coming out so far.
And given the complexities and time-consuming nature of tax disputes, we've already mentioned that up to 8 or 9 years, how has the Vivad se Vishwas scheme helped in alleviating these challenges? And what has the response been from the business community?
Well, absolutely. I just mentioned about some of the statistics from the previous scheme, and what we are expecting currently is that there are about 300,000 cases that are currently under income tax litigation. And the business community is quite curious and wanting to apply to the scheme based on our interactions with the business community. And like I mentioned earlier, the scheme is now effective from 1st of October. A lot of consultation has started, a lot of interactions have started. And the scheme the settlement under the scheme, what's very important to keep in mind is that just because a taxpayer settles under the scheme, it does not set a precedent. So it does not become, a bottleneck in future. They can continue to adopt the tax positions they had, and the settlement does not become binding for them for future years.
Okay, what should taxpayers and businesses consider when deciding whether to participate in the scheme?
Absolutely. I think, firstly, they should look at the significance of the issues in litigation. Are they important? Are they recurring? Then, in which case, it would be better to litigate, get a favorable outcome, which can then become a binding precedent for the tax authorities for other years. But if the impact of the outstanding litigation on the balance sheet and for the investors is not really favorable, or there is a situation where there can be a potential fundraise or an M&A expected, and the amounts involved, especially in accumulated interests, are uh, heavy, then the Vivad se Vishwas scheme affords an opportunity of complete waiver of interest as well as penalties. Therefore, what is important is for the company to assess the likely outcomes under litigation, and if they are already in APA, for them to again assess the likely outcomes under APA. And remember that under APA, under rollback, or even in the APA years throughout, there is no waiver from interest. So that also needs to be added to assess and weigh the better option for the company and make an informed decision. And as they go about accessing the scheme, several times there are interpretations to be made. And we have a good amount of learning from the previous scheme, which can be referred to. So these are some of the points I would like to highlight.
Well, thank you very much, Fatima, for sharing these valuable insights into tax dispute resolution mechanisms in India. Do you have any final thoughts for our listeners?
Just a few quick ones that, as always, avoid overly aggressive tax positions as the tax authorities are collaborating globally around base erosion and profit shifting. And tax authorities in India are becoming even more vigilant and sophisticated. It will be advisable for companies to have a long term approach and a holistic approach to transfer pricing policy planning, maintain robust documentation, stay updated on emerging tax issues, and I think carry out a regular risk assessment to see if the past transfer pricing policies are still robust. And as always, look out for any dispute avoidance or mitigation schemes that are available and access, so that the companies are able to focus on what they're doing best, which is on their business.
Fantastic. Well, it's been great speaking to you today, Fatima. Thank you very much for taking the time. That was Fatima Hunaid of Grant Thornton Bharat,
Thank you.
and this was a Chambers Expert Focus video, Dispute Resolution India.
Thank you very much.
Thank you very much. Right, that was great. I'm not going to turn recording off just yet. I just wanted to ask one thing, and if it's relevant and useful, we can maybe cut it and move it back into the video at some point. I'm not sure if this is relevant. I was just wondering about pricing methods, and you were talking about, I think the main choice is transactional net margin, but comparable uncontrolled price is also used sometimes.
Yeah.
And I was
right.
just going, I didn't want to kind of interrupt you halfway through your, but are there known sort of underlying factors which determine which of these are chosen? Is one more or less common in unilateral as opposed to bilateral APAs, or in certain sectors?
Sure. So the choice of method, really, there's another method that is also popular, which is the residual method. And that is adopted in case of unique transactions, or perhaps in where it does not precisely fit the profit level indicator as per the methods that are prescribed. There could be loss-making situations or situations which involve valuations. So the usual methods don't apply there. But the transactional net margin method is by far most commonly used in services transactions, where India is the service provider, or even where India is availing service from outside. The comparable uncontrolled price method is used typically in intangible related transactions, payment of royalty, for example, and where comparable data is more easily available in case of imports or exports, where the company itself is transacting with third parties as well, and it can easily show the comparable data in support of its transfer price with related parties. So this is usually the case.
Fantastic. Thank you so much.